Welcome to Trade with Smart YouTube channel. So this is the day one of the 100-day challenge of posting about the way I trade my strategy, which is SMC. So I'll be doing a series of different videos on this channel to teach people the way I trade. By the grace of God, I'm a successful trader, and I'm opening this channel just to help people know the way I trade and my trading strategy. Of course, I trade SMC, and today we're going to be talking about what SMC concept is. Now, whatever you see on my channel, whatever you see me teach, this is basically the way I trade and the way I understand it. We know that there are thousands of SMC traders, there are thousands of different traders out there, but when you've learned a particular trading strategy, you develop an edge towards that strategy after several studies, right? You develop a particular kind of way you trade that same strategy that might be different from someone else. Okay, but you guys are trading basically the same thing. So that is what I'm going to be doing. So this is the first video out of the 100 videos. I hopefully, by the grace of God, I'm able to keep up and create those videos for you guys every day, so that by the end of the series, definitely, even before it gets to the end, a lot of people would be able to understand trading and the trading the strategy. But remember, there's one thing I want you to know. If you, especially those who are new, if you're a newbie to the trading, you don't know what trading is, right? Strategy is not what you should learn first. You should understand all the basics of trading first. Know all the fundamentals, everything about cryptocurrency, the history, the Bitcoin, the forex market. Know all those information. Those are basic knowledge. Understand those basic knowledge first. Learn candlesticks pattern. You understand them before you come to start learning strategies. Okay, so with that being said, let's get started. So what is smart money concept, right? So I'm not going to be giving you guys the traditional definition of smart money. I will just put it in my own terms. Smart money is just a trading strategy that helps you follow the big players in the market. By big players, I mean the people who are capable to move the market makers, right? So we want to trade like they trade, because when they move, they make big moves. So we want to move with them. It means we want to follow the market. Where if the market is going up, we want to go with it. If it's coming down, we want to go with it, right? We want to follow the market makers, the way they trade, the banks, the institutions, right? Instead of retail traders. Okay, we want to be able to spot where money is, where these people are willing to buy. We want to be able to spot where they are really willing to sell. We want to be able to avoid fake moves and distractions that these people print in order to take out retail traders. We want to be able to know good price movements and the market. So that is what smart money is just all about. So it's a kind of strategy that you need to be disciplined, right? And you need to be very, very patient in order to move with SMC. Okay, so there are basic things about smart money concept that you need to know. You cannot skip those basic things. I think the number one is you have to understand market structure. That is the first thing, right? You cannot trade SMC without understanding market structure. Okay, so of course you know that market structure is understanding market structure simply means understanding the way the market moves, the behavior of the market, right? There are three basic ways the market moves: in an uptrend, in a downtrend, and in a ranging market, a sideways market. Those are the three basic ways, right? You might have several ways, but for me, those are the basic three ways market moves. That is market structure. So if you understand market structure, you understand the behavior of the market, you will be one step ahead of understanding how SMC trade. And we in SMC, I trade SMC, I do not follow the normal way market moves, because the traditional book says if market is in an uptrend, market creates higher highs and higher lows like this, right? But if you're trading smart money concepts, by the time you understand most of the basic things about this concept, you see that market does not actually move in this traditional format. You can have market moving like this, right? Still in an uptrend. You can have market moving in this same format. Instead of just creating high highs and high lows, you can have market creating also high highs and high lows, and also internal structure as it goes. So the basic, let me just state out the basic things that SMC you need to know in SMC. The first thing is understanding the market structure. The second thing you need to know about SMC, you need to learn in SMC, it's liquidity concepts. Liquidity concepts. You need to understand the place of liquidity in the market, which is basic. One of the most important part of SMC is identifying liquidity, where money is lying, because for in the market, liquidity and SMC serves as a fuel. It means for the market to properly go up or the market to properly go down, it needs to take out liquidity. It needs to sweep some kind of money before it moves to the direction it wants to go. So it serves as fuel. So if we have can identify areas where liquidity is lying, we'll be able to make proper moves, right? We're able to know that, oh, the market makers wants to take out liquidity before moving, right? That's why you have structures like this. When the market's creating that high and you see a sweep, then market goes the upper way. Market wants to continue, it goes down again to take out liquidity, to sweep, then continue moving up. Same thing if it wants to go down, it sweeps liquidity, creates the liquidity, sweeps it, and keeps on going down. So we want to understand all those things. So smart money is kind of technical. You will need time and patience to do it. That's why, of course, we're going to be having series of video. You're not going to understand everything about SMC on this video. Of course, this is the first, and this is just introduction. But basically, I'm just going to list out the basic things we need to learn. The first is market structure, understanding market structure in the SMC way. After having the basic idea of what market structure is and the textbook version of market structure, we'll now be understanding market structure in an SMC way. Okay? Then the second is liquidity, right? Understanding liquidity, the types of liquidity we have in the market, and the various ways we can spot them in the market. It is very, very important. So once you understand that, the third thing you want to be third concepts, or let's say characteristics of SMCs, those fundamental things you need to know about them, is imbalances, right? Imbalance, we call that imbalance, or you can say fair value gaps, FVG, imbalance or fair value gaps, right? Now, imbalance is also a form of, it's just when you have fair value gap, right? It's a level of areas where there are inefficiencies. It means there are orders. It's still a form of internal range liquidity, right? Where there are orders lying, and orders, those orders need to be filled. So it helps SMC builds a direction where the market is going. If there's a value area we are looking at and there is also an imbalance there, it means the market is likely to go and fill it because of the orders there, because of that liquidity there for it to make it move. So all these things are part of what we are going to be using in order for us to trade the SMC strategy. Okay, the first one I said market structure, understanding market structure, understanding liquidity concept. The fourth one, imbalance. And under the market structure, there's what we will talk about, directional bias. It's still market structure. It means we want to be trading with the market structure, no matter where we find liquidity or where we find fair value gaps. If it does not align, right? If it does not align with market structure, we are not going to be taking any trade there because it's going to be risky. Okay, we want to trade We want to hunt liquidity, look for liquidity in the market. We want to look for imbalances in the market that must align with the market structure. Okay, then the fourth thing is to understand. A lot of people, you must have to have understanding of what demand and supply. Demand and supply. You can call that resistance and support. You must have an understanding, because SMC works with market structure, and demand and supply is something that is needed, right? Identifying good demand and supply zone will help you plot what we call the order block. That will be the fifth. Let me add that. I will say identifying. Let me just put order blocks. So when we're talking about order blocks, I'll be teaching you guys how to also identify valid and invalid order block. Now, if you do not know, right, if you do not know about demand and supply, or you cannot identify a resistance or a support on your chart, there is no way you'll be able to pick out proper order block. So all these things are very, very important. Order block is just a level of demand, a level of supply where market made an impulsive move, right? Where market make an impulsive move. So when we are talking about understanding market structure, you will know what an impulsive move is, right? You will see an impulsive move is when market make an aggressive move either to the upside or to the downside. Order block is just the last zone, the area before that impulsive move happen, right? The demand area or the supply area before the impulsive or aggressive move happens. We will understand what an impulsive or aggressive move when we are talking about understanding market structure. So all these things plays an important role. They act hand in hand, right? You cannot just go and learn only liquidity and say you want to start trading properly. You must understand market structure. You must understand liquidity concepts. You must understand fair value gaps. We have different kind of fair value, two types basically, inverse fair value gaps and fair value gaps. We'll be teaching you that. I'll be teaching you how to identify that. The demand and supply zones, of course, where people are willing to buy and also where people are willing to sell. Order blocks, those areas of demand or areas of supply where you will be looking as your point of interest, areas where you'll be marking out as a point of interest, because in SMC, where market pumps from, right, where market makes an impulsive move, that area is also a point of interest, because for market to be interested in buying in a certain area, whenever the price retraces back into that area, there's a high probability that market will continue buying from that level, because it means the market makers were interested in buying from that zone. That is why the first impulsive move happened. So if price retraces to that zone, there's also a probability that price would want to buy, continue the movement from there. So basically on these five concepts, right, understanding market structure, liquidity concepts, imbalances, demand and supply, order block, right? If we break down all these five, you'll be very, very close in mastering the SMC concepts.